Hello, Childfree Family and friends. Cody here. Welcome to today's presentation, Let's Talk Money. This is episode 8, and we're going to cover student loan repayment and paying for school. I'm Childfree Family, and for those who may not know, it's a micro-social network for child-free people. If you remember the good old days of social media when they didn't run evil algorithms and show you what they wanted to show you, it's like that, but better. Plus, there's a map so you can actually see where there are some other child-free people around the world based on their city. I'm also the co-founder for the Childfree Convention, which is a free virtual international event with various topics covering all kinds of cool aspects about the child-free lifestyle with speakers from all over the place. But enough about me. Let's get Dr. J up here, and I'll tell you a little bit about him. This is Dr. J Zigman. He and his wife are child-free. He has a PhD in adult learning from the University of Connecticut and is a certified financial planner. A key thing to note about Dr. J is that he is a fiduciary, which means he must put the needs and interests of a client ahead of his own. On top of that, he is an advice-only and fee-only certified financial planner. So in other words, he is paid for his time by his clients. He doesn't get any kind of commissions, incentives, kickbacks from selling products or making recommendations. So the client pays him for his time and advice, and he helps them learn and manage their own finances. Welcome, Dr. J. How are you today?
Hey, good evening. I was thinking, Cody, this weekend, I'm down in Mississippi. We actually had 2 inches of snow. It never happens. And I unfortunately didn't have a shovel. So, the things you miss when you move from Connecticut to Mississippi. But luckily, it was melted by the end of the weekend. So it's just now dealing with mud.
You didn't bring your snow shovel with you?
No, but the broom kind of worked for a bit.
There you go. Before we dive too far into this, cover our fun disclaimer. So the following views, thoughts, and opinions expressed are for entertainment and educational purposes only. Please seek the assistance of a professional to aid you in your financial decisions. We're just having a good time here. So just out of the gate, we're talking about student loans and debt with student loans and how to manage paying for college and kind of from a child-free aspect. So one, I guess, thing to really consider here is that from a child-free lifestyle standpoint, you don't have to worry about saving up for a college fund unless you feel really philanthropic and want to pay for someone's college. So that's at least a load off of our shoulders. What do you think about that?
You don't have to pay for others, but you still got to pay your bill.
Well, that's true. That's true.
I was looking at the numbers, Cody, and I just pulled them up, and it's $1.7 trillion in student loan debt.
Wow.
To give you an idea, there's about $800 billion in credit card debt. So student loan is
bigger than credit cards. Man, that you wouldn't think that out of the gate, but because everyone uses credit cards, but not everyone has a student loan. So the apple to apple comparison just shows you how entrenching it can be.
So there's 44 million or so people in the U.S. that have student loans, and the average is about $37,000 that they have.
Oh, wow.
And I see them all the time. They come to me, hey, I got student loans, and I see them, in their 40s, 50s, 60s, looking at retirement. And that $30,000 loan is now $100,000 because over time it's grown. And I just talked to somebody the other day who was really excited. She paid off her student loans. I was very proud of her. But over half of what she paid was just interest.
Yeah. And I guess it's another statistic that's out there somewhere if someone could find it. But of the student loans, how many of them actually ended up with a degree versus just going to school and paying for it and then not finishing for various reasons, but you're still saddled with that debt for attending college or university?
So I did a program I used to teach for University of Connecticut on, they call them non-traditional students, people 25 and older going back to college. And when you look at the data, those going back, they've chosen, hey, that's considered adult at 25, and I'm going back. The completion rate is actually much higher than those who started at 18. Mm-hmm. I mean, the truth is, at 18, do you really know what you want to be when you grow up? I mean, I'm 44 now, and I don't even know what I want to be when I grow up.
Still want to be an astronaut?
Boat captain actually is my current answer, but I mean, it is scary, and they've just put out a couple different analysis looking at return on investment of college. And the truth is, once you figure in the student loans, very few programs have a return on investment.
Yeah,
and that's assuming you graduate. If you got halfway through and stopped, you're stuck at a income level of essentially a high school degree. It's hard.
They don't put that in the brochure.
And I think the hard part of it is, so we talk a lot about this life script that we follow. And Childfree, we've chosen not to follow the life script by saying, hey, we're not going to have kids. But another part of life script is you're going to college. Like
it is. Yeah.
That's it. You're going.
It's literally, I think it's like the first one, go to school.
It's like, get a job. Yeah. And so I've done some research looking at just adults in general. And I believe outside the child-free population, most adults actually don't choose their path. They were told, hey, you'd be great at whatever. Mm-hmm. So then they go to college for that. Then they get a job opportunity, might be close to it, might not. Then they get maybe a promotion or something. And next thing you know, 15 years have passed. I'm like, how in the world did I get here? Because they were just following the steps. Mm-hmm. Now, here's the funny one, Cody, because I'm looking at my data for my book on Childfree Wealth. And interestingly enough, a lot of people who have chosen to be child-free, who throughout that part of the script, still follow the other side of the script.
Yeah. Yeah.
I don't know if it's just stronger or what.
It's just ingrained, like from just such a young age of what to do, what path to follow. And yeah, it's hard to break that mental structure, I guess. I don't know. But anyway, let's just dive right in here. So how about paying for school without student loans?
Yeah. So if somebody asks me right now, I want to go back to college, should I take a student loan? My answer is, the math just does not work. So let me talk through a couple of examples. So give you my own personal example. I actually was one of those non-traditional students, went back to school in my early 20s. I went from no degree to a PhD in 5.5 years, and it cost me less than $9,000 for the entire thing. So it's possible to not only get your bachelor's, but other degrees without student loans. So let me give you a couple ideas. If you're going back to college, you're not sure, whatever it is, one of the first things I tell people to do is find somebody who's doing the job you want to do, ask them how they got there, and ask them if they would do it again. If you ask medical doctors, most of them would say no. They'd go be a physician assistant or do something else rather than putting in 12 years of schooling. You'd be amazed by some of those answers. So that's the first thing. I want to figure out where I want to end up. The second part is I want to figure out the cheapest way to get there. So one of my advice to everybody, I don't care who you are, is you can test out of almost 2 years of school with CLEP exams. CLEP exams are where they came from was actually the vets coming back from Vietnam and Korea and saying, okay, I want to get what they call correspondence courses. That's old school, that's old people.
No offense if you went through that.
No, I don't want to age. I did those exams too, but I mean, that's what they call them. You used to actually literally mail out for them. But there's a place called modernstates.org, and it's a nonprofit. It will prepare you for the exam and pay for the exam. It's actually a reimbursement. So you can get up to 2 years of college completely free. And you can do it. I mean, I've had people take a test a week, and each test is 3 to 6 credits. I mean, it's one of those things people go, does that really count? Well, you test out of your general education credits, okay? Really? Do you care what my score was on French cinema? No, you don't. And all you got to do is pass a multiple choice exam. Pass. That's like a C. Anyone can do that. So like, for example, depending on the school, but most of them take English Lit. You actually take an exam, write a 500 or so word essay, and it's 6 credits. That just saved you thousands and thousands of dollars. The other bonus is if you've done that, you've tested out of 2 years of school, even if you take 4 years to complete your college, you can spread your class out over 4 years and still work. That's a bonus. So that's the first thing I want you to think about is testing out. Second thing is, if you're going to go to college either for a bachelor's or master's, got to see if they have either a research or a graduate assistantship or some type of assistantship program. Most schools have these where you work 10, 20 hours a week, and they waive either your tuition, your fees, your tuition and fees, and they give you money. That's what I did for my master's and my PhD. I took a graduate assistantship. I actually was helping people put courses online. It was great, paid for my entire program. For most people, most programs, getting a master's or PhD, the math isn't there for doing it if you're going to pay out of pocket. So you need to find some other way to do it, because if you're going to take student loans, and we're going to talk about all about how to get out of them, the only way to get out of them is to pay them off, or die. I mean, I hate to say it that way, but that is one of the options. So you want to be thinking about it in advance. And I put this little section here just because everybody's accepted, hey, you have to do a certain thing. I actually had talked to somebody, and they explained, hey, they had done a bachelor's degree in 3 years. And I was like, wow, that's insane. I like that. And then I went to a college called Charter Oak State College in Connecticut. And I said, hey, I did the math. I laid it all out. I can do this in 9 months. And they kind of laughed at me like, no, you can't. It hasn't been done. Good luck. 9 months later, I had a diploma in hand, and I was already enrolled in a graduate program.
Oh, there you go.
And it's possible. You just have to kind of, they call it hack schooling. You have to think about it differently and not follow the standard script. Does that make sense, Cody?
It does. It does. Here we actually have a comment here. Let's see. Lila, I've graduated degree from Argentina, could never afford to study in the USA. Now I'm trying to finish a continuing education master's in Germany, but I'm at 46. What are my chances to have a master's or PhD back in the US, getting to work as a teaching assistant or in any capacity? Do they take to old people? What do you think about that?
Okay, Cody, we are really getting old. I'm 44. You're in the same age. And
I'm 43, yeah.
I don't know when 40 became really old, but I guess but to answer your question, a couple things. Which program you're in will matter. So if you're going into some type of program where there's limited people, so I hate to say it, but all the hard math and science programs, all that, graduate assistantships are expected to go with it. And that's not a big deal. The graduate assistantship could be teaching assistant, could be a research assistant, could be helping with the cafeteria. It doesn't matter. It still pays the same. Right. So if we're doing psychology, the downside of that is there's limited programs, but what you can do is figure out a specialty. You want to find a niche, and if you're willing to move, you can find somebody that's doing a research in an area that you're interested about and say, hey, I'm really interested in marriage therapy psychology. I don't care, whatever it is. It could be psychology of child-free folks, just hint, hint. And now you're coming in with an idea. And what happens is the professors, my wife's a professor, so I know this from the inside too. I taught in academia. I taught at Yale. I taught at UConn, taught different places. The professors have research money, and they need people to help them. If you're willing to do the work, they're willing to pay.
There you go.
But you have to be willing to go to wherever to get that degree.
Great comment. And that's just a quick reminder. This is live, like we're streaming this. So if you have a comment, a question, let it fly. And if we can answer it, we will. This will also be archived. Once it's done recording, it'll be available on the Childfree Family YouTube channel. So you can always go there as well. And if you're there watching this as archived, add in the comments, questions, and I'll get with Dr. J and we'll try to get some answers for you. So with that, we'll kind of step into the next topic here. So we got student loan overview. We got private versus federal loans.
So let's bring up this slide because it's not exactly simple to explain. All right, I got to take a deep breath because I swear these student loans are worse than taxes in some cases. So here's the thing I want you to think about. If you have a private loan, okay, that's either from an outside bank or sometimes the university have those, you don't have many options. You may be able to take that loan and consolidate it into a federal if you have other federal loans or things, but private loans, no. And I got to pause here because a lot of people talk about this student loan forgiveness. It's going to just disappear and it's in the politics. I hate talking politics. I don't want to talk politics. But here's what I can tell you. Private loans, there's very little or no chance of you seeing any type of forgiveness there. Where you may see the forgiveness is in some of the federal loans. And I have clients call me all the time and kind of, well, should I put off paying my loan because I'm hoping for this forgiveness? But we're going to talk about the Public Service Loan Forgiveness Program. That's the one that exists right now. Until you see changes there, I don't foresee it. We're right now in March of 2022, and right now they're looking at, okay, May 1st, student loans starting back up. my crystal ball, and this, I'm not a politician person, but just my crystal ball is if they extend if they extend this moratorium on making payments, they'll extend it through November because that's election season. Let's be real. Does that make sense, Cody?
It makes perfect. We're in the U.S., so we're talking U.S. stuff. If anyone's outside of our home base here,
Yeah. So they're going to extend it through election season and then kick it off to the next person to deal with.
Mm-hmm.
The thing I want you to remember from a political standpoint, they've been talking about forgiving loans for over a decade.
And they use that blanket statement. It's the student loans, not necessarily whether it's federal or privately owned.
So if you have a private loan, it's on you. You're going to have to figure that out real quick. Now, today we're going to not talk about Parent Plus loans because if you're watching Childfree and you have kids, that's a different discussion. But if your parents took out loans to help you, some of this will apply, some may not. So here's what you want to think about. When you see the federal loans, it says other Perkin loans and some of those things. Older programs, some still do exist. You're not going to see too much of that. You're going to see more of the direct loans and this FFEL. I don't want you to get wrapped up in which loans they are, but you need to know which loan is yours. And what's going to happen is you will probably have 4, 5, 6 loans under your educational program because they usually have one for each year. So you may have a variety of these loans. If you have no clue what your loans are, which by the way is common, you want to go to your servicer, get a copy of the statement. And because like Navient and a few others have sold out recently and gone out of business, you might have a little trouble finding that. So you may have to pull your credit report to see what your loans were and then track down who has them. Now, that's not exactly foolproof because they may or may not be reporting it to your credit. So you're going to need to do a bit of sleuthing to figure out what your loans are before you can decide what your options are. And you want to get all of them together first. And it's interesting. I've done this exercise with quite a few people, and it takes a bit of time to figure out what do I owe and where and how much do I owe? Uh-huh. Because you sign one, like, okay, you sign your FAFSA form. You say, yeah, I want tuition assistance. They're like, here's these loans. They don't tell you anything about them. Or if they did, you didn't hear it. I have days where I'm going, is that a direct loan or FFL? And then does that qualify for this? Does that make any sense, Cody?
Is it, well, and I'm thinking from like a home loan standpoint, is it common for companies to basically sell off your loan to another company that will take it over?
Yes and no. There's only a couple servicers for the federal loans. Mm-hmm. Private loans, yeah, they'll sell them all the time. One of the reasons actually why I feel from a political standpoint, you won't see forgiveness is a lot of these loans are actually out into products. Everybody remembers this mortgage-backed securities that blew up 2008. Mm-hmm. Well, there are student loan-backed securities that do the same thing. That's behind the scenes. You won't see that. But the servicers have come and gone. So used to be Sally Mae. Sally Mae was the one everybody knew, and Sally Mae had a room in your house, and she lived there the entire life. Sally Mae became Navient, they just keep going out of business because it's not a fun business to be in.
Yeah.
Nobody's like, yay, I work in student loans.
Some people might. They might get their jollies out of student loans. I don't know.
Maybe. I like helping people pay them off, but I'm not trying to chase people down for them. So what you want to do is figure out what you have, and then that's going to determine what options you have for income-driven repayment and public service loan forgiveness. We're going to talk about those programs separately. You may be able to take FFELs or other loans, but make them into a direct loan, then have more options. You may be able to take some of the private loans. Not likely, but you may. So you have to have the right type of loan to qualify for the right type of program. So we're going to talk through all different options, but you're probably going to have to, rearrange some stuff to get it to qualify before you can do that. Now, one downside of this, if you start rearranging your loans, what happens is you're picking a path and you're stuck on it. So if you've decided, hey, I want to be on an income-driven or public service loan forgiveness, you're all your eggs in that basket. And what happens is if you take, and we'll talk a little more of this, refinance your loan and make it private, you've decided, forget it. I'm not dealing with the government at all. So, and many of those options are not ones you can change later.
Okay.
If you're like, hey, I had these direct loans and I refinanced them to private loan to get a lower rate, okay, that's your option. You're paying that loan off over 10 years. So you have to think about this before you make a step. Right now, while you're not paying the payment, is a good time to spend some good quality time with your student loans.
Yeah.
And an adult beverage in many cases is the way you're going to get through it.
Well, and that's like everything you're talking about. Like, again, it's not something that's necessarily even laid out to you when you get that loan at your college, university. If they do, it's to sign this form. Like, you can read it over if you want to, but they're not going to tell you all these options, all these behind the scenes things that can happen, transactions, and what you can do with it later. It's just pay to go to college.
There's some form somewhere, Cody.
Yeah.
It's kind of like the HIPAA form that you sign at your doctor's office every time, and you have no clue what's on that either. Like, people just sign all these and what happens is over time, like, well, we're going to give people more information there for making an informed choice. Look, I don't know about you, but when I was 18, I was dumb. All right. I just made dumb decisions. I'm not sure when I stopped, but it's just, you're asking somebody to take out a $100,000 loan when they don't know what they really want to be. I mean, that's hard. I don't know how that happens. I think the challenge is once you have the student loans, you have to address them, because if you don't, they're not going to just disappear.
Mm-hmm.
So let's move on, Cody.
Yeah. You want to pull this guy down? Yep. And so now we've got death and disability in the student loan overview.
So I hate to start with death and disability.
Well,
but it's one way to get rid of your loans. So on the death side, and this is going to sound a little harsh, but good thing is once you die, your spouse or your family can apply to have your loan forgiven. So you're not passing it down or passing it to your spouse. Whew. As long as they didn't make it into a private loan and you both co-sign for it. If somebody else co-signed for it, we could have messed this up somewhere. Now, the other one is disability. So this is kind of an interesting one. I've worked with a couple of clients on this. If you get disability from VA or Social Security, it's pretty easy to get your loans forgiven. The way it works is if I get what's called SSDI, Social Security Disability Insurance, and I get approved. I don't know. I had cancer, or I'm blind, they're usually like, it's not like I stubbed my toe. It's like you are disabled for the rest of your life. So if I have approval from Social Security, I send in a form, say, hey, I'm approved. The government does its thing, takes a couple months. And then they send you a letter, say, your loans were forgiven or discharged. But here's the caveat. If you come off a disability within 3 years, they go, oh, you're okay now. Let me bring these loans back.
Is that retroactive, or do they start it off from where you would be?
Depends. It could be either, but most likely it's been paused in that period of time. Because what happened was people were like, oh, I'm disabled. I broke my arm. And then they're working more. The other part of it is they look at how much your income. So if you say like, well, I'm disabled, and then you're like, oh, but I'm going to run a side business over here and I'm making more than certain limits. They're like, welcome back to student loans.
They love limits.
So you have to be very careful in that 3-year period. First of all, don't defraud the government, but disability is one of those where you can mess up without realizing it. So the income limit's it's like a little over $1,000 a month, something like that. So if you decide, hey, I want to walk some dogs just to get some exercise and make a little bit of money, you could very quickly mess up your disability and your student loan forgiveness. Does that make sense, Cody?
It does. And going back to what we spoke about a little bit earlier with, changing your loan, the structure, and doing the co-signing with a spouse, and then that person happened to die, and now you're on the hook to still pay that loan when you may not have before. Again, things that may not be fully explained to people when they're going through the process.
And let me go one more on that one. So some people are like, well, I will take money out of my house and pay off my student loan. Well, then if I die, you still owe it on the house. If you get disabled, you still owe it on the house. And you went from unsecured debt because the Student loans not secured to anything. They can't like come take your degree away. Now it's on a secured debt. Same thing also with credit cards. Credit cards, well, they're like, well, I could do this. You start playing games, you're going to get caught. It's like it's unintended consequences.
The shell game with your debt load, basically.
Let's go to the next one.
You got it. So next up is bankruptcy.
So, all right.
Can I declare bankruptcy and walk away? Is that a thing I can do?
Technically, you could. It doesn't happen. Okay, so this is one of those weird ones. So I just saw a really interesting case. This guy said, well, I took out student loans, but I didn't use them for school. I just used them for like snacks and computers. And actually was able to get it thrown out in bankruptcy.
Oh, wow.
Here's what happened. Government's now going to appeal that forever. Same thing has happened. There's somebody recently in the news where the government's going after, went bankrupt from cancer, and now they're like, we're still coming after you for your student loans. Because here's the deal. If the courts to start deciding you can bankrupt student loans, you'd see a line.
Everybody would be bankrupt. Yeah.
They'd be like, done, because I take the 7-year hit on my credit.
There you go.
So what's happening is while you can get one or two courts to kind of, that makes sense. Then the federal government says, I don't agree. And now you're stuck in a legal battle with the federal government. And they're willing to spend whatever they have to spend to protect this. I think this is just kind of like gut feel. I think you'll see some of the bankruptcy reform before you will see some of the student loan forgiveness. And the reason for that is bankruptcy exists. Student loan forgiveness doesn't really on the wide range. If they said, look, we're willing to negotiate or do bankruptcy to get you out of student loan because there's a negative consequence that comes with that, credit hit and all that, I could see that first. Now, mind you, probably take a change of law and it would take quite a bit of change. But then you've now gone bankrupt on a loan you took out, which there's a moral and ethical. What do you think, Cody?
It's one of those things where it's again at 18 to 24. If you were a traditional student, you agreed to accept this monies for this degree, and if you couldn't make a go of it, it's like, well, I mean, what's the blame? It's one of those things. It's like, were you sold, the magic beans, or
So I think the hard part of this is if you ask a bankruptcy lawyer, should you go bankrupt? It's like asking my dog if he's hungry. He's going to go, yeah, you should. Because that's how they get paid. And you might be able to win, but then you might be in a battle for the rest of your life.
Yeah. And this goes back to kind of what you talked about in the very beginning of kind of, if you know kind of what you want to do, talk to people that are in that field, find out what they did, what they would do different. And then start to look into the other means that you brought up about, is there other ways to take care of this without diving into a student loan head first?
Yep. Let's move on.
All right. Next up, we've got for-profit schools.
Okay. So I'm biased. I'm going to admit that up front. And I say friends don't let friends go to for-profit schools. Okay. That's just bias. That's completely bias. And part of that is because a lot of for-profit schools have done some sketchy things. So let me talk about two in particular. ITT, which, come on, you remember the commercial?
I remember the commercials. Yeah, I mean,
they were everywhere.
Air conditioning repair and some other. They had some weird stuff they had come up on that screen. You're like, there's a degree for that.
And then here's the other one you're going to remember, Cody. DeVry. Okay, so ITT and DeVry, they were out there talking about, we'll get you these jobs and we'll do this, that, and the other. And then
they were guaranteeing like placement. It's like, whatever, 80%, I'm throwing a number out there, of our graduates have a job within 3 months or something, whatever they would used to say. Yep.
So here's what happens. If you went to one of those schools, and there are other for-profit schools that have gone out or been this, you can actually apply and say, look, they took advantage of me and get the loan forgiven. This year alone, the Department of Education put out $415 million of loans. They just disappeared because they got screwed. Now, it's a bit of paperwork. It's a bit of a pain. But if you went to one of those schools, you're going to take a shot at it.
Mhm.
You gotta, yeah, because like the ITT is a great example. You didn't go there and you knew well, we're going to place you and get you a job. And then
Yeah.
everybody got out and like, where's my job?
Mhm.
And the other thing with for-profit schools is you get stuck. So there's some other bigger for-profit schools who I'm going to remain nameless. And what happens is when you start there, you can't transfer your credits anywhere because other schools don't take it. Or I get a bachelor's at somewhere, and you go to get a master's, and they're like, I don't
Yeah.
trust XYZ school. So then you go back to the for-profit for a master's, and now you're paying more, and it's just, that's the way that system is made.
Yeah.
I'm not saying nonprofit schools are saints, because they're not. I'm just saying the for-profits have a bad history, which is why there's actually specific programs to just wipe that debt out.
Mm-hmm.
No guarantees on that, but it's worth a shot.
Well, and that's what you hear a lot of, like the clickbait ads or whatever, not ads, but articles where they talk about, like whatever, student loans forgiven for so-and-so, but they're making it sound like it's a political aspect when really it's fraud in some degree of the previous company. And it's like, hey, it's almost like the law commercials that come up. It's like, did you eat red berries as a child? Well, you can sue this company for it or something. So
it gets even funnier on this one. So Navient, which was Sally Mae, which was the person doing all the background work, just got sued. They owe a whole bunch of money to write off loans. Here's the fine print. You're only getting the money if you didn't pay your loans. If you were actually paying on time, they're like, sorry.
Yeah.
What logic is that?
Thanks for doing what you're supposed to do.
So the court stuff on this is just, it makes no sense.
Yeah.
But you got to try whatever you can. So let's keep moving.
All right. We've got interest rates and the payment schedule.
Yeah. If you can't get rid of it, here's what's going to happen. Your student loan is going to be put on a 10-year schedule. That's the standard payment schedule. They just take the loan, split it up monthly, 10 years. That's it.
And that starts after you've graduated. But with there's a grace period, I believe. But
there's usually a 6-month, period, but it depends. There's some caveats in there. Now, average student loan rate is like 5.8 to 6%. So what that means is every 12 years on average, your student loans will double. So if you wait 10 years to pay it off, this is why people are like, hey, half the amount I paid was to interest.
Yeah.
The answer is, that's the way the math works. I mean,
that's why they load it with interest. That's why.
Yeah. And I bring this up because we're going to talk about income-based payments and income-driven payments. You can go out to 25 years, but that interest doesn't stop, and it's going to keep doubling. All right. So 10-year schedule is normal, something around 6%. If you have a bunch of student loans, you might have a bunch of interest rates. There are ways to refinance and do that, but you want to be thinking about that. So if you're like, oh my God, this payment is crazy, that's what it is. It's a 10-year loan. The problem is if you have $100,000 that you owe over 10 years, well, it's going to be a mortgage payment.
That's a lot of interest. A lot of interest.
Yeah. So let's keep moving.
Yep. So we have employer student loan match.
Here's a weird one. This one came up more with COVID and some IRS changes. And some employers are starting to offer, rather than a 401k match, a student loan match. So, if you can't afford to put the money away for 401k because you're busy paying your student loan, which makes sense. I mean, I can understand how that happens. They can match it and they can get some tax bonus for that.
Okay.
So first, you want to look at that. The second thing I'm seeing is some employers are just offering student loan money for you to come and work there. Do 2 years with us, we'll give you some money. For both the match or just money, you got to pay that as income. So you're going to pay taxes on that. But if my employer is going to give me, here's $2,000 towards your
extra
loan, you go,
yeah, sure,
I'll pay the taxes on that. It's
Yeah.
kind of like how that works.
Yeah. So are they doing that in lieu of like 401ks, or are they? Oh, wow. Okay.
Specifically in lieu of 401ks in most cases, unless, like, for example, doctors have historically done this. You sign on with the practice and they're like, look, if you're here 5 years, we will pay all your loans. That's a good deal. So make sure you know the details on what that is.
All
And
right,
Cody, did you share the link with all this? There's There's a post.
I can, let me throw that in the comments while you talk about our loan forgiveness programs here.
Yeah, so I'm sharing the link because there's a lot of information here, and we're going to get a little deeper. All right, loan forgiveness. We're going to talk about two big programs, PSLF, and we're going to talk about NHSC. But here's the thing to remember. They have specific guidelines, and there are some weird programs out there. So one of the things is your homework. I want you to Google your state plus loan forgiveness or your career plus loan forgiveness. There are some weird things, like maybe you're in a rural area and they're encouraging people. I just saw something. I don't know. One state was trying to like convince people to move there, so they're helping to pay loans. Like there's some weird stuff out there on loan forgiveness. Google them because those are specific to you. But we're going to talk about the big ones. Yeah. So public service loan forgiveness. So we'll bring up the slide, Cody.
You got it.
All right. Also, you'll hear it's called PSLF. Bottom line is you got to work for the state or nonprofit or government. Now, military has some of its own stuff. You can also qualify it here. So I'm not going to go into the military stuff because there's some specific things there. But working for state, federal, or nonprofit is the first thing. So for example, let's say I have $100,000 in loans. It might be worth it for me to take a lower paying job at a nonprofit or a state in order to have that loan disappear. So that's part of what that is. And what you see this a lot is healthcare, teachers, a lot of civil servants qualify under public service loan forgiveness. My non-political political thing is I have a feeling they will expand this before they do it wide for everybody else. Like they might add another category that fits in there. Does that make sense, Cody, to you?
It does. But I've got a question or a comment and a question that have come in. Let me jump this in here real quick. We've got Michelle here. It says, so interest is currently paused due to COVID. Do you think administration will do student loan forgiveness for non-public servant? Well, I think they meant to say service. I have no student loans, but my husband still has $20K. We have the money to pay it off in full in savings, but have kept it in high interest accounts to earn funds while the payments have been paused. Plan on keeping it there until payments resume. This is wish they wouldn't. What are your thoughts on that?
So keep the comment up because I want to pull this apart.
Sure.
There's a couple different pieces of this. So this COVID thing, we've decided COVID's endemic and we're kind of past that. So they're going to have to change the reasoning behind it if they're going to continue this type of pause. I believe either it's going to end May 1st or it will be like December 1st, right after the elections. And that's me being a little jaded. So I just want to do that. Do you see loan forgiveness? This is a little jaded too, but the only way I see that is if they're trying to buy some votes by saying, hey, here's some money. We gave it to you like in October, just before the election. I hate to say it that way, but that kind of is what it's looking like. But here's the thing. The big question there is who pays for it? Uh-huh. And that's where it goes downhill. If we said, okay, we're going to give $10,000, because that was a discussion of forgiveness to everyone. By the way, I'm all for not charging people for college. I'd like to figure out ways to do that. That's my own belief. But I think if we're going to say, hey, we're going to give everybody $10,000, you got to do $10,000 times 43 million people. I don't even know what that means. That's a lot of money.
I mean, all you hear in social media and the news is inflation these days. Yeah.
So it is possible. It's the same way you would see tax breaks. So when you saw the child tax credit, I know some child-free folks got upset at that, and I understand why. It's effectively the same thing if they do a student loan forgiveness. Okay, we're just going to give you a credit, and we're going to take it out of you somewhere else. Michelle, here's my thing for you. You want to hold that money in a high interest account. Make sure, by the way, this is where a high yield savings account is great because it just gets interest and it's not at risk. And you want to wait until they say yes, no, that's fine. You got nothing to lose. But here's the thing. For many people, they're like, well, they don't have the money on hand to pay it off. And they're like, well, I'll deal with it when it gets here. That's a big bill.
Yeah.
Because here's what's happened. We got inflation. We got people's budgets. We got interest rates going up. And then, by the way, we're going to start up student loans again on May 1st. That's that's how people lose their hair. I mean, it's just, so for you, Michelle, I like the idea. Hey, I've got to put aside, I'm going to do it. I think what I would be cautious about is some people go, well, I'm going to wait until they forgive it.
Mm-hmm.
Well, they've been talking about forgiveness for a decade. If you do that, your loan will double in time.
There you go. So it says give the student loan credits to the Childfree.
I'm not disagreeing. That's just so public service loan forgiveness. You got to be qualified. You have to work full time. That's 30 hours. Why they come with 30 hours? That is. You have to have direct loans or consolidated direct loan. That was that chart. And then your loan has to come under income-driven repayment. Because here's what happens. A standard plan is 10 years, which is 120 payments, which then means your loan would already paid off, so there's no reason to apply for forgiveness. So I said, okay, we'll stretch it out over 20 or 25 years, and then you pay it. The good thing about public service loan forgiveness is when they forgive your loan, there's no tax consequences. So if you can stretch it out, I'll show you the income-driven repayment plan in a second. The bonus there is it disappears and you don't pay any bills. Some of the other programs you actually do pay on interest. And so we can bring the slide down for a minute.
Yep. There's
also one more program, the National Health Service Corps, NHSC. By the way, this is by HRSA's NHSC. HRSA's the health and like Cody was like, did you mess up? Like,
we love acronyms.
This one is specifically for healthcare providers who are providing primary care, dental care, or behavioral health services. So our friend that was talking about the psychology degree could qualify here. And what happens is if you're willing to work in a NHSC site, which is usually a rural site or a urban site where they have heavy healthcare needs, you can get up to $50,000 for 2 years of service. And they just write you a check. And that's awesome.
Yeah.
Because it's not even like income-based. They just, here's your check. You put it to your student loans and go. And you can continue that over multiple years. So if you're coming out as a MD or a physician assistant or something, and you got $100,000 of loans, find an NHC site and poof, there's limits on how much money they have per year and all that. I was just working with somebody recently on this, and they're like, this year we have more money than we ever had. I will make a comment on that because for both PSLF and NHSC, it depends on the administration. The previous administration approved less than 1% of all public service loan forgiveness applications. It just was. Past couple of months, there's been more than that than there were in the last 4 years. So here's the only downside. You are planning on what is the program going to look like in 10 years for PSLF, which is, what's that, 3 administrations from now or whatever. You're taking a little bit of a gamble that the government doesn't change their mind in between now and then. Yeah. All right. So let's look at these income based. And I have a slide for this one.
All right.
Because I can't keep these straight. All right. Don't get wrapped up in the terms IBR, pay, repay. Well,
thank you.
Here's the bottom line. Okay. Depending on the type of loan and depending on you and your payment, your situation and income, you may qualify for any of these 4 plans. The general thing when it says 10% of discretionary income, what they do, take your total income you have, that's the adjusted gross income, minus 150% of the poverty guideline. And that's poverty guideline for family size. By the way, child-free folks, this is another place we're getting screwed. Did I say that out loud? Oh, sorry. Okay. Because we're only on a family size of 1 or 2. All right. So for example, if you make 60 grand and you're single, the 10% of your discretionary would be $364 a month. That would be what your payment would be. That changes as your income goes up, but it'll be no more than the 10-year standard repayment amount. So whatever your normal was. Now, a couple twists on this. For IBR and pay, this is one of those weird tax ones. You can be married and filing singly, so you just take your income. So if you know your income is going to be low, it's an option. You're actually probably going to end up paying a little more in tax by doing that choice, but then your payment's lower. It's one of those you got to kind of balance. Sometimes things work, but you may or may not want them. The other thing to keep in mind, these are for 20 or 25 years. So the way this works is if I'm on an IBR, for example, You see there's a slightly different guideline based on when you had it, but close enough. So I pay my payment for 20 years. At the end of 20 years, the rest of the loan they'll just wipe out. But you're getting a tax bill on that as income. So I'm making it up. Let's say I had a giant loan and it was $150,000. I paid off some, but I had interest over, because remember that every 12 years is going to double at 6%. And let's say they wrote off $100,000 at the end. Well, if I'm in that 22% tax bracket, I got a $22,000 tax bill to come with that.
Yeah. Yeah.
Thank you very much. My loan disappeared, but now I have an IRS problem. So I don't love these programs because you feel like you took care of it, but then you have this grenade waiting for you later in life. What do you think about that, Cody?
Yeah, I mean, robbing Peter to pay Paul. Like the government's going to get their tax money one way or another. So
yeah, I mean, I think the hard part is if your income, if you can't afford it, fine. But you need to find a priority to paying off that loan because the interest is still growing, with the exception of this little COVID respite. I'd love to see them stop interest forever going on, but I don't. Somebody's got to make their money somewhere, and somebody will lobby it to exist. So you have to look at it. Here's my thing on the income-based repayment programs. This is one of those where you have to do a bunch of math and guesstimates of what your income is going to be over the next 25 years. That's hard.
That is hard. Yeah.
If you're on public service loan forgiveness, be on this, because then at the end of 120 payments, you can get rid of it. Now, one little caveat on that. Public service loan forgiveness, there's a temporary window right now where they're being nice. Used to be, and this is why they didn't get approved in the previous administration, if you miss one payment, it has to be 120 consecutive on-time payments. So if you didn't write the check 1 month, or it didn't process, or you bounced it,
auto pay,
or your employer changed, or they didn't certify, or there's a bunch of those. Right now, by the way, if you have applied for PSLF in the past, there is a temporary program right now where you can ask them, hey, can you give me a little bit of leeway? And they may even give you credit for payments you made. And they may, they're literally trying to reach out and say, I'll try to help you. Right now, it's only scheduled to go through October. So just in case.
Yeah.
So let's keep moving.
You got it. You want to pull this slide down? You done up here? All right, cool. All right. So we've got refinancing a student loan.
Yeah. So there's a bunch of companies right now out there trying to get you refi, and rates are considerably low, and they'll go up a little bit with the interest rate raises, but they're decent. The downside of this is you've just changed your outcome based on that first chart. So if you said, okay, I'm not doing PSLF, I'm not doing NHSC, I'm not doing income-based repayment, I have 4 different loans, 4 different interest rates, and I want to refinance for lower interest rate, great. Now, funny one with this one. If you refinance or consolidate, one of the ones with PSLF is it can actually reset that clock again. So I had 60 payments, and then you just consolidated, you're at 0.
Yeah. Oh boy.
So you only do this option if you've already run out of the rest of the options. Once again, most refinancing are going to be on a 10-year time. So that you got to make sure you're going to be able to swing that payment as you go along. And most refinances is now going to put you in a private loan, which is fine. But that's after I've already run through all of these other options when I get to refinance. The thing, though, I want you to remember is refinancing your student loans to another student loan, I'm okay with. Refinancing to put on credit cards or on your house or those are not options. What do you think, Cody?
Well, and it also goes to refinancing it as well, about putting your spouse on there, talking about the, dealing with death down the road. It's like they would still have to be on the hook for that loan as well. So for the too long, didn't read scenario, what now? What can people do that are in this situation?
So this is that question of, that was a lot of government ease.
A lot of things.
What do I do? All right. First step, got to figure out all your loans. Like get them all
Yeah.
on a sheet of paper, all with what is the payment, what type of loan is it, what structure. Second step is, what are you going to do for your job? Now, by the way, if you have 6 figures of student loan, which by the way is common, I mean, like that's not like an odd number. Average is 37,000, so that range is pretty.
That's the average, yeah.
If you got 6 figures, you probably need to look at a job within a PSLF type job, nonprofit or something. I don't know what that means to you. So, for example, I had people that did the math and figured out that if they went and worked as a janitor at a local university, they'd be better off because the university had some reimbursement and they could be PSLF, even though their degree was in something advanced. It just worked. May not be your ideal job, but if it can get rid of the loans, that might be an option. The other thing then is, all right, if that's not an option, what is our plan? Which means budgeting, getting out of debt, making it a priority. So this is one of those, and I'll put a shameless plug here. This is one of those times when you might want some help. This is where working with an advice-only, fee-only certified financial planner to do the math, help you through it, might be worth the money because you make a mistake. First of all, you change your outcome. But the other part of it is you got to have an overall financial plan. You don't want to be retiring with a student loan. I mean, that's just, I don't even know how you do that. Okay. I mean, I have some people trying to retire.
It sounds like a lot of people are going to retire with student loans. It sounds that way.
But the problem is if I have a mortgage and a student loan and my other debt when I retire, I'm not going to have enough money to pay my bills and I'm going to be working at Walmart. I mean, nothing wrong with working at Walmart, but I don't want to do it by choice. You know, there's a gentleman at the local Walmart. He's 85 years old and his job is welcome to Walmart all day long. And I'm like,
and that's some people's life goal. They want to be that. They want to be the greeter at Walmart. Which,
if that's your goal, that's fine.
Yeah, be a happy person. Say hello. But
you want to work out a plan. The thing is, hoping and dreaming for the government to fix it for you, I don't see that as a plan.
It's wishful thinking. But again, you've got to. It's a grain of salt. It's political talk from either side of the aisle. Doesn't matter what side you think on. Like it's always gonna be thrown out there and dangled.
And I'm all, by the way, we should be arguing about student loans. We should be arguing about, should we pay them off? We should be arguing about the cost of college. We should be out there lobbying that. But if it takes 10 years to figure that out,
your loan might be paid off by then. So there you go. Well, Dr. J, thanks for joining us. Thanks for everyone in the audience through comments out there, questions out there. Appreciate that. Is there anything that you want to talk about? You mentioned a book. Do you want to?
Yeah. So I'll give a shameless plug to my website. So that's childfreewealth.com. If you're looking for financial help, I do offer a no-cost intro meeting for 60 minutes so we can just chit-chat, see if it makes sense. And really what I'm working with people on is how do you get the life you want with your finances? It's not about just the dollars. It's about working it through. And as you saw, like student loans is just one part. And I'm like, how do you make sense of this? And there are times it doesn't make sense, but at least you can have somebody as a thinking partner to work it through. And then, Cody, you're right. Coming up, keep your eyes out for a book called Portraits of Childfree Wealth, coming out hopefully in June, which it'll have 26 stories of how people have actually done with finances in Childfree. Some people made a lot of money. Some people are broke, and we're not automatically rich.
Well, and as you saw, this is, live, it's streamed live. We're looking for someone that wants to join us and go through just kind of a run through of their financial situation with Dr. J. I won't say we'll have fun with it, but I mean, it can definitely be educational for the individual and help other people out that might be in that situation as well. Again, Dr. J focuses on people who are child free, and that's a really cool thing that fits our audience. So thank you for doing that. And if you're interested, just shoot an email to me at info@childfreefamily.com. Or if this happens to be on social media, just DM me or whatever, and we'll get it set up. And looking forward to episode 9 coming up. We're going to talk about small businesses and side gigs. So if you're interested in working a hustle or starting a small business, you'll definitely want to tune in for that one. So Dr. J.
And it's interesting. Child-free folks seem to have more side gigs and small businesses than the parents.
I mean, that little bit of freedom goes a long way. So with that, we'll see you guys later. Thank you, Dr. J, for your time. Thanks, audience.
Have a great night.
Later.